What's going on, guys? It's back, and today we are going to be talking about inflation. The CPI data came out, and it's not good. It just keeps getting worse. Everything keeps getting worse. So it's crazy to kind of see these record high numbers. I think this is the third highest inflation has ever been in history, or something. So we're getting up there in the inflation percent, and CPI is designed to stay low. So far the numbers not looking good. This is the CPI data right here that came out. We had 8.6% inflation. We had 8.3% last month. Now we have 8.6% this month. It's continuing to get worse. Inflation didn't peak. The experts are not really experts. I don't know, I don't think they should get that title anymore because they've been wrong at every single turn. We've gone from inflation is transitory, inflation is not happening, inflation is good for you, to now this, where we have inflation that it's pretty just devastating everybody, and people just can't barely afford things that they need just to kind of get by. So all these numbers, everything, the Federal Reserve, undisciplined monetary policy catching up with us. We should know by now that is always going to have unpredictable outcomes, and usually pretty bad ones. So, but if we go a little bit deeper here, we can see just how bad inflation really is. So these are the months. If we look, we know this month was 8.6. Last month was 5%. So not only is inflation really bad and at, super, like, almost all-time highs right now, it's compounding, which makes it even worse, because last year this time we had 5% inflation, which is not good. That's over double. 2% is average inflation. 2% is what we aim for. 5%, over double of what is aimed for inflation. Now we have, on top of that, this year 8.6%. So inflation was already bad. Now it's getting worse, and because of that, it's compounding, which makes the effects of and how you feel inflation even worse. So things are just getting terrible, and that's why markets are dumping. The last standing index, the S&P 500, very close to bear market now, getting there, and it's probably going to hit it within like the next couple of weeks or so. So we'll see how that goes. But because of all of these moves and how bad things are getting, people are scared of the Fed continuing to kind of just rate hikes or do rate hikes, and scared that maybe they just skip the rate hikes altogether and go up to like 9% on interest rates. I don't think they can really do that because that's not sustainable. I mean, if they did do that, we're screwed. Everything goes to zero. The economy grinds to a halt. No one has a job. It's gonna be super bad. So they don't want to do that. But you can see here, this is the chart that we're talking about here, kind of talking about how high inflation really is. So you can see right now, this is where we're at, and at points in time, the peaks here have only been higher twice. This is about the same area, so two other times the peak has been higher. How high is this one going to go? Because people thought last month we were peaking, it's good, inflation's over. This month it gets worse. And now we don't even have the optimist people out here saying it's good, inflation's peaking. So how much worse is it going to get? And CPI is designed to stay low. I mean, I don't think anybody buys 8% inflation. The food in the grocery store is up like 15%. Gas is up 50% for the year, like 100% for a year and a half or 2 year period. Used cars were up like 15%. Like, where's this 8% coming from? Energy is up like 20-30%. This 8%, I don't know how they're getting it. It just doesn't make sense. It's not the normal everyday person isn't paying 8% more for stuff. They're paying way more than that. So, but with these rates come the effects on the bond market. We see the bonds, 10-year treasuries up over 3%, 3.159% right now. So bonds, because the Fed's offloading bonds, the yield is going to go up on them, and people are going to be investing in bonds because they want a safe investment. But at this point, I think the yield is just going to keep going up. We're going to see this yield continue to just move up and up and up as rates go up, as the Fed offloads bonds. This rate is just going to keep going up, and then you're going to have 4, 5, 6% treasury bonds. And then, is that sustainable? And if there's a ton of money flows into that, can you sustain that? And just, who knows? Everything, it seems to be at a breaking point with everything, with Jerome Powell and the Fed and the financial system and macro stuff. It seems like things are kind of coming to a breaking point, and something has to break. And once something does break, then the Fed's going to be forced to reverse track, start quantitative easing, trying to, get things to be all right and fix the economy a little bit, fix the markets. And when they do that, inflation could still not be under control. So we just have super interesting times coming up. So we have this too, a quote. I think this is someone on the Federal Reserve, a member of the Fed, came out, said, We are changing our forecast to call for a 75 basis point hike on June 15th. So this next upcoming meeting, 5 days, is when they're going to hike rates. And the question is, are they going to stick to the 50% or half a percent, 50 basis point hike that they were going to do? Or are they going to up it because inflation is getting worse, not better, and they're going to put it to 75 basis points, which is 0.75%, and make inflation or make the rates higher to try and stop inflation? But the problem we have right now really is we have inflation going crazy while the economy is contracting and doing really bad. So that's stagflation. And when you have that, when you're pushing these rates up, you're making the economy worse and worse, but inflation is not getting better. So we're kind of in the worst position possible, where we literally are probably experiencing stagflation right now. And we have Jack Dorsey replying to Nick Carter here, talking about CPI, saying, CPI is at 8.6%, and the New York Times recently admitted the inflation truthers were right, so it's double digits according to the science. So the article here, I guess, why has inflation calculation changed over time? Which is right. The CPI is designed to stay low. So they take expensive things out of the basket and they don't measure it, and they measure what people would be buying because people can't afford the more expensive things. So just act like it doesn't exist. That makes sense, right? And they have some sort of weird rent thing. I think like the rent in CPI is up like 5% or something. So I don't think anybody in their right mind thinks rent's up 5%, rent's up 15, 20% at least, and maybe way more than that in some areas. The median rent's like $2,000 a month right now. In New York City, it's $4,000 a month if you want a 1-bedroom, 1-room apartment. So right now, things are not looking good. And saying people are coming out and talking about it now. Why has this calculation changed over time? It's a great question. And, we had Jack Dorsey replying to him saying no one knows how to measure this, which, if anything over these last couple of years has proven anything, it's these experts in finance and in the Fed and everything have absolutely no idea what they're talking about. They said inflation wasn't going to happen. Then it started happening. Then they said it was transitory. Then they walked it back and said, well, we're not going to say transitory anymore. Then they said inflation's good for you. And now they're saying, yeah, it's inflation. they're just going along with it. So they don't have any idea what they're doing. The experts aren't experts, and people on Twitter seemingly know more than the economists do, because in 2020, all of these Bitcoiners and people on Twitter like Pomp and Dorsey and these guys were talking, saying printing all this money is going to have bad consequences, going to have higher inflation, things are going to get expensive. And the economists were saying, no. That won't happen. We know more. And then it happened. So how much can you trust them? And then to end this off with the market right here, this is the S&P 500 doing exactly what it's been doing time and time again. We had these rallies into a dump, into a rally, into a dump, into a rally, and now we are dumping yet again. So this was yesterday in preparation of the CPI data, and we saw a huge move down in the market. Now we have a huge gap down and a continued move down. So just nothing's good. There's no good news. The market's going to keep falling until the Fed stops with these rate things, until inflation gets under control, until things get better. And right now, there seems to be nothing pointing towards anything getting better. So we got inflation at decade highs. Gas is just getting extremely expensive. Rent is becoming way too expensive for the average person. Everyone's complaining about it. Food is skyrocketing in price. Just everything that can go wrong seems to be going wrong right now. And where we are in the cycle of a recession and how bad this will be is unknown at this point. Who knows when all this will flip around and we can finally look back on it and say, remember all of this craziness. But until then, we're just gonna have to see where it all goes from here, and when at some point inflation turns down, because at some point it has to, right? That's gonna do it for this video, guys. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next